How can cash flow problems lead to business failure? 9 million in sales, 90,000 in net income. This owner made less than his cruise. Here's why. More sales without cash control just digs a deeper hole. By the end of this video, you're gonna have 3 cash moves to help save your business from failure. I want to tell you this crazy story. It's one of our clients we've worked with for about 7 months now. And when they came to us, it's a retail company that sells apparel. And they came to us and they showed us their financials, and we looked at the top line and we're like, wow, this is amazing. For this type of apparel, they sold $9 million in a year of this apparel, and they'd only been around for a couple of years. And then, as our coaches are trained to do, they went all the way down to the bottom, looked at the net income, and saw that there was $90,000 of net income. And so we start to ask all the logical questions. Hey, are you like running cars through this and houses through, all that? And he's like, no, that's what I had left over. A 1% net income on $9 million worth of effort. Oh yeah, and I'm not done. They also took out an $800,000 loan from the bank, and one of the partners infused $500,000 of his own cash into the business. And so if you do the math, they were making $9 million, or generating $9 million, they were earning $90,000, and they owed 1.3. Yeesh. I don't want to be a part of that. So even me just putting those numbers out, you can start to kind of see how cash flow problems can lead to a business failure, because revenue was not the issue. It was everything else that was coming in, the amount that they owed, the money wasn't coming in quick enough, maybe their pricing wasn't high enough. There were a variety of things that I want us to talk through to see how you can prevent cash flow from leading to business failure. In that example I just gave you, I want to expose a myth and really shed light on this myth. Here it is. Sales solves everything. No. Sales is like marriage. You know what marriage does to an already great relationship? Is it makes it greater. You know what marriage does to an already rotten relationship? Is it makes it more rotten. Marriage is like a magnifying glass on what already exists. That's what sales is. So if we've got an out of control, chaotic fire with a business doing $9 million in revenue and $90,000 in net income, we throw more sales on it, all we're gonna do is explode that fire all the more. Instead, what we need to do is we need to pour the fuel of sales onto a controlled fire by controlling the cash flow, the pricing, all of those other things that go with it. But we got to bust that myth that sales solves everything. Sales within an appropriate system solves a lot for sure. The truth is, in contrast to the myth, is that cash and cash flow can really help lead a business to health. So where we live in the low country of South Carolina, we have what they call tidal creeks, and tide comes in and goes out behind us. Now behind our house, we actually live on one of those tidal creeks, and we have a crab dock. What they mean by that is you don't have water all day long because the water goes out and water comes in. And where we live, the tide comes in at about 7 to 9 feet every 6 hours, 12 minutes, 30 seconds. I want you to think about that. 7 to 9 feet of water flows out every 6 hours, 12 minutes, 30 seconds, and then 7 to 9 feet comes rushing back in every 6 hours, 12 minutes, 30 seconds. And now that's on a rhythmic pattern, right? Cash flow doesn't follow that same rhythmic pattern in that it comes in at the same time every time for most businesses. But the concept is helpful to understand that there's gonna be times that water's out, and there's gonna be times that water is in. In fact, during the pandemic, we used to tell our clients this: work on the dock while the tide is out. Sometimes when you're thin on cash flow, it's an opportunity for you to be able to build things in the business. Can be helpful because you can see things with a clarity that you can't see when you've got a lot of cash in the business. So don't just bemoan when you've got a dearth of cash flow, but I want you to see it as an opportunity to reinvest in the business at that time. It gives you clarity to be able to see things that you wouldn't normally be able to see. So out of these 3 strategies, here's the first one I want you to focus on. I want you to focus on cash and let your CPA and your government focus on accrual accounting. What do I mean by that? Well, you, the business owner, need to understand your cash position basically every day, because it gives you perspective on decision making day to day. Because cash in the account is the fuel that you have to operate from. But when you look at your accrual statements or anything that's been stamped and printed in the past, like a balance sheet, a P&L, or an accrual-based P&L, what you're looking at a past presentation of what has been, or from an accrual standpoint, what could be, but not what is. We want to look at present, and that's where subdivided cash accounts can help you to be able to do that. This is a good time to tell you about another video that I've prepared for you that you can walk through and see how to subdivide your cash accounts and also track those accounts and the meaningful metrics so it will emerge you out of these cash flow problems. So click on the link in the description below and you can go watch that video on how to deal with cash flow problems in a small business, and I'll walk you step by step through that. But I want you to commit to cash Let your CPA and your government and your financial people deal with everything else and just tell you what they need from you at the end of the year. Remember this, your CPA needs your accrual accounting to explain your past to the government so you know how much to pay. But you need subdivided cash accounts to dictate to the market what the business looks like going forward. I want you living in the present and the future. Let your CPA live in the past for you. The second cash move that'll keep you from business failure is to actually subdivide your bank accounts. And so I use this popcorn metaphor all the time, and I think it's such a good metaphor. You know, movie theater popcorn. I love it. Big bucket. I always get the biggest one when I go to a movie theater. No lie. My kids make fun of me, and my wife has no sympathy for me at the end of the movie when I feel sick, because I eat the whole thing. And so when I've got a big bucket of popcorn, I eat the whole bucket. But if I were to subdivide that big bucket of popcorn into smaller, 6, 7, 8, 9 smaller buckets, I wouldn't eat those 8 buckets. I would just eat a couple of them. And when they're in smaller buckets, if popcorn spills out, I would be much more careful before letting it spill out. Within the big bucket, popcorn's going to spill and we just let it go. If you're operating your business from 1, 2, or 3 bank accounts, it's akin to having a big bucket of popcorn, and money just kind of leaks. I get that question all the time. Scott, how does money leak? Well, we know how it leaks. You're paying for stuff out of your house from your business. Money just goes things. You've got subscriptions you're paying for that you forgot. There's fraud that happens actually on a regular basis in small business, that when it's all in one lump sum, you lose $1,000 out of that big bucket, you won't notice it. But if you lose $1,000 out of the small bucket, all of a sudden, it's very noticeable and you start asking questions. Actually, this morning, before I filmed this video, I was talking to a dear mentor of mine, and for their entire marriage, and they're in their 60s now, their entire marriage, he never shared their financial position with his wife, and she really didn't care. And just a couple of weeks ago, they sat down and he walked her through everything that they're on, their net worth, the cash they have, all of those sorts of things. And he was a little nervous to do it because he said, when I do it, I'm afraid she's going to want to go spend more. Well, it turns out just the opposite happened. And she started to look and go, wait a second, we're paying $600 a year for car washes? We're paying $1,000 a year for this satellite radio? We're paying all this? I don't want to do that anymore. She became aware, she became illuminated to those things. So when we subdivide our cash accounts, it's illuminating how we're actually spending our money and not just looking at a spreadsheet. Now, there's a third cash move that's going to help prevent this business failure. It puts you in a much better position for success. Remember, only 4% of businesses actually live to see their 10th birthday. Why? Well, number one reason is the business owner just gets tired. But what do they get tired of? Is usually dealing with this issue of cash flow and people. Those two things. And so this third cash move will be really powerful for you if you can start tracking what we call your A, B, C's of accounting. A is cash accounts. B, your bookkeeping, receivables and payables. That way you know what's owed to you in the next 30 days and what you owe in the next 30 days. And the third are your customer metrics. Whatever metrics you track, whether it's website hits or Facebook ads or one-on-one meetings, whatever it might be, you track those. And you do this every single week. On an expensive piece of software? No, on a spreadsheet. Put the weeks of the year up at the top. Put the things that you're tracking, A, B, C's, down the side. So all of your A's are all of your cash bank accounts right there. And then once a week, let's call it on Monday, you go into myonlinebank.com and you check your cash balances and just plug them in right there. Well, Scott, can I do that in my accounting software? Sort of. Most likely you won't, because you won't have the discipline of doing that. And secondarily, what we've found is actually doing this on a spreadsheet gives you an incredible visual flow to match how the flow of cash actually works. The accounting software doesn't do it as well as doing it on a simple spreadsheet with 52 weeks out of the year to be able to do that. So you track all your cash accounts weekly, you track your receivables weekly, your payables weekly, and then you track any customer metrics that you want to weekly. If you start doing this, you're going to start to pay attention to each one of those things. And once you're paying attention, now you're paying for what really matters. And you're putting yourself in a preventative standpoint to not go into business failure. Here's the irony of cash flow. It can either lead you into bankruptcy because you're not getting money in fast enough, or in getting money out, you're having to borrow it from somebody else. So you've got cash flow, but it's leading you in the wrong direction. But the irony of cash flow is it also works in the other direction. That if you can get your money quick enough, if you can get it out quick enough without having to borrow money, all of a sudden you've got profitability there that you can use to refuel the business and to refuel your life. I've created a powerful gift for you, and it's a free gift that I think will be incredibly helpful if you'll agree to do the work. Click on the link in the description below, and I want you to go to solvecashflow.com. And our team has prepared a cash flow handbook, and you can walk through the subdivision of bank accounts, the tracking those, the communication around those, so that you've got clarity and you can avert cash flow problems from leading to business failure. Our entire aim is to liberate you from chaos to make time for the things that matter most. And part of that chaos can be brought on by cash flow. So let's go to work to do something different.